This is your LMAX Exchange technical update for Tuesday, October 24th, 2017. Eurodollar. So the euro continues to show signs of wanting to trigger this major head and shoulders top formation, with the neckline also happening to coincide with the 100-day moving average, a pretty significant longer-term moving average. And so if the market establishes a daily close below 116.60, it will suggest that we could see this pattern formation play out with a downside measured move extension targeting 112.30. At the same time, inability to establish a daily close below 116.60 will keep the immediate pressure on the top side and suggest that this could just be a bullish consolidation ahead of a fresh upside extension. And so 116.60 below is the key level to watch to see if we close on below it on a daily close basis, and above you want to pay attention to recent resistance, which comes in at 119.10. The prospective left shoulder of this head and shoulders top back above there would put the pressure back on the top side. Sterling dollar. So cable has been chopping around since bottoming out recently at 130.27. Overall, the structure here continues to favor the upside over the medium term after the market broke out earlier this year above some key resistance, that previous range resistance at 127.75, which suggested that we've now seen a longer term bottom in October of 2016 at one in the 118s. So from here, although we could see short-term pullbacks below recent lows at 130.27, look for setbacks to ultimately be very well supported into that 127.75 area ahead of the next major upside extension back above the 2006-17 high at around 136.60 and through 140 further up. If we do see a break over the coming sessions back above 133.38, that's the recent resistance and recent high that we saw on the 13th of October, that would put the more immediate pressure back on the top side. Dollar yen. So dollar yen has been consolidating over the past several months, and although we've seen the market bid up in recent days, the market has been confined to a range trade, and so this rally that we're seeing should find some decent resistance into the 114.50 area, and we could see a topside failure again in favor of an adherence of this range and a fresh downside extension back towards the range lows down around the 108s. We've seen a recent 2017 low at 107.32, and so at this point only a close above 114.50 would compromise or potentially negate this outlook, and any rally are expected to be well capped into this resistance at 114.50. Euro Swiss. Euro Swiss has been gradually moving higher overall. The structure here has shifted back to the top side since this market broke out above 110 and 112 in 2017, and the focus now is on a push up towards some previous critical major support at 120 that was seen back in January of 2015 and before, when we had that floor at 120, and any setbacks here should be very well supported at this point ahead of 112. Aussie dollar. So Aussie has been showing signs of topping out in 2017 after putting in a plus 2-year high at 81.26. The market is looking for a lower top now, which will be confirmed on a breakback below 77.34, exposing a drop to 75. Dollar CAD. So dollar CAD has been continuing to extend its recovery off the 2017 and plus 2-year low at 2062, and there's room for this recovery to extend now towards a retest of the August peak at 127.80. At this point, setbacks should be very well supported ahead of 24. Kiwi dollar. The New Zealand dollar is gravitating now back towards its 2017 low, which comes in at 68.18. That was the low seen back on May 11th. At this point, rally should be very well capped with only a breakback above 72 to compromise this bearish outlook for Kiwi dollar. SPX 500. The S&P 500 has been ignoring some intense overbought studies on medium and longer term time frames, and now is doing the same on the daily chart, with the market pushing up to fresh record highs beyond 25.50 and now focused on a test of 2600. It's already also exceeded a measured move extension in the 25.65 area, and with daily studies highly overbought, there are calls for a short-term correction at a minimum, but again, the market has been shrugging off these daily, weekly, and monthly studies. Right now, we need to see a break back below the low from the 19th last week at around 25.44 to take the immediate pressure off the top side. gold. So gold has been showing signs of slowly recovering over the past several months, with setbacks well supported and the market gradually making higher highs. And so look for this latest round of setbacks to be ideally supported ahead of 1250 in favor of that next major upside extension to fresh 2017 highs and eventually beyond the 2016 peak at 1375 further up.